All right, so those were the headlines, and let's move on to the big ticket interaction on the show. And we're putting the spotlight on WowMomo, that is in the midst of securing a bridge round of 150 crore rupees to fuel its continued growth. Now, the company has already raised 90 crores from existing investors. That includes Khazana, the Malaysian sovereign fund, and of course, Kamal Agarwal, the owner of Haldiram's Nagpur. Talks are currently underway with the several high net worth individuals and investors. And this upcoming round is projected to be anywhere between $80 million to $100 million. It'll also be a split between the primary and secondary capital. Well, joining us now is Sagar Daryani, the co-founder and CEO of WowMomo Foods, to talk more about this expected funding. Sagar, thank you very much for joining us here on ET Now. Kamal Agarwal, the promoter family behind Haldiram's and Khazana, they are spearheading this round in your business. Tell us what's being planned and how soon will the fundraise be made final?
So thanks for having me, Sumita. Basically, this is a bridge round, where we are doing a 120 to 150 crore kind of a bridge round, which will be which precedes the larger round that we would be doing between June and September, October. It's very clear for us that, this is going to be our last round, the larger round that we do, more like a pre-IPO. So, it's more like a cleanup of the cap table and getting enough capital to continue the expansion. Getting someone like a Kamalji is a blessing. He's got deep rooted experience in the FMCG space. So someone who's been there, done that. And for us, the goal today is not just to be the largest homegrown quick service restaurant chain, but to be the largest homegrown food company coming out of India, right? So when we are growing QSR and we're growing FMCG, I think it's really nice to get someone someone like a Kamalji to come and back us from Haldiram's Nagpur. He's someone who's been there, done that. So grateful to God. But yeah, like I said, the next 2 years, they're going to be opening 500 stores. So the capital infusion is largely for that. Also to work a bit on the back-end infrastructure and to keep growing the FMCG business, which is by far right now right now comprises of the frozen momos and the kappa noodles, but very soon the Wow Kulfi also gets added onto that. And lately, we've also got into Horeca in a very big way, supplying tons and tons of momos to a lot of five-star hotels, a lot of quick commerce platforms. So yeah, I think it's a very exciting space that we are into. And like I said, fingers crossed to be the largest food company coming out of India.
Right, and we do hope that happens soon. And Sagar, you have spoken about a lot of very interesting points. You've spoken about, of course, the fundraise. You've spoken about WowMomo and, of course, the several verticals that it has. And, of course, store expansion. We'll come to all of those points in just a bit. But let me first address the key question on this fundraise. And the related point to it is, where will that take the valuation of your company?
So, Sumita, at the moment, this bridge round is more of a convert, which is linked to the next round. So this is at a 20% discount to the next round. And for the next round, we are doing a mix of primary, secondary, both. So there would be a blended number to this. But the last round we had closed at around close to 2,500. So let's see where this, where this goes to. Let's see where the markets end up valuing us at. At the moment, don't have clarity, but looking at where the markets are and how the timing is, I think good businesses will get money. Where the valuation reaches, only time will tell.
You're stating that only time will tell where valuation really goes. But since we're a business channel, we would definitely want to know the bracket figure valuation that you're looking at. If you could give us some hint of, where you're looking at the company's valuation to go from, the current valuation that the company has. There are lots of figures also doing the rounds. So why don't you reveal a bit about that?
See, honestly, current round is at a floor and a cap. The floor is under 2,600. The cap is at 3,000. That's all I can reveal. New number where it sets in, not very sure. But the business has grown by almost 35% as compared to the last time when we raised. By the time we raised this year, we would have been 6 months into the business for this financial year. Again, depends on, how the listed peers are trading. Because, everyone starts valuing you against listed peers. Again, depends on who comes in, whether it's a financial investor, whether it's a strategic. Like I said, I never say never to anyone or everyone. I think everyone's welcome to be a part of the Wow story and to be part of the Wow growth story. But like I said, I don't have a number in mind because I don't want to reveal a number which might be far-fetched. I don't want to reveal a number which might be underquoted. So I'll leave it to time. I'll leave it to the investors to judge us and get us to where we have to be.
All right, Sagar. So let's move on then. I've pushed you enough on the valuation question. You're currently operating 4 brands under the Wow portfolio. You have WowMomo, Wow China, Wow Chicken, Wow Kulfi. So you really are taking on the competition with some of these verticals that you have. But is there enough room to solidify your margins, given that they're legacy players in all of these categories and segments that you're also operating in? So how are you looking at making a spot for yourself, and what's going to be your distribution and revenue strategy, which is going to be core for your expansion?
So for us, at WowMomo, I think, we are already profitable. We've got a gross margin of 72%. I think in the next 2 years, we'll be reaching 75%. So WowMomo sits in a very healthy position for us. Talking about Wow China, I think the goal in the next 1 year is to completely go chef free, do not be chef dependent. So a lot of work is happening there. Just like in Momos, we completely turned it around from 15 cities, 15 kitchens to 3 factories now. So a lot of back-end work is happening in Wow China, and we feel Wow China should become or should get to a break-even number by end of this year. Wow Chicken, we're still burning money because we are competing with some giants, international brands who also come into India. So it's more about, getting market share, owning market share. The discounting is heavy there. Wow Chicken, we are at a, at a 60% food cost of 40, at a 40% food cost of 60% gross margins. How do we get that 40% food cost to 30? Only time will say. I don't have an answer yet, but a lot of work needs to happen there. Wow Kulfi, again, we're very comfortable. I think we're going to be category creators. Knowing at the kind of quality we are building, I think we need more touch points, more points of sale. I think once we get those volumes, the factory or the manufacturing unit that we've built for Wow Kulfi should be able to generate revenue. So I think Wow Momo, Wow China, we are solid. Wow Chicken, we still need to get some answers. Although it's doing really well, the throughput sales are very, very high. I would say our store sizes would be 1/3 or 1/5 of an international chain, but the revenue would be 1/3. So we're doing a good job there. We need to get the margins correct. Wow Kulfi, I'm very bullish. It's just that this is going to be our first summers. It just got launched. We'll have to give the brand at least a year's time to settle in.
Sagar, I have to say that I haven't tried very many of your brands, but definitely tried the kulfi recently. And I'm definitely a fan and supporting that one particular vertical, definitely. But the question now is, when we talk about the distribution strategy, how much will quick commerce contribute to your revenues, given that as a channel, you're banking rather heavily on that platform?
So quick commerce, I think I would look at it from 2 different sides. I think one would be for QSR, where quick commerce is really becoming the new buzzword in QSR. I think we're doing really well there. We've seen business go up by 10 to 12% across those where we have a Swiggy, Bolt, or a Zomato Quick. But talking about FMCG, I think quick commerce is a big market for us. I think it's 52% of our revenue. My team just informed me over the weekend that we've become market leaders in Zepto. So that's a good feeling to have. But I think quick commerce is here to stay, here to grow. I think it gives you the flexibility to launch new products, experiment, and the ones that are successful are here to stay. The ones are not, you can just either reinvent them or get them back to the bin and come up with new ideas and new products.
Right, Sagar. So since we're talking about quick commerce, we have to talk about the retail channel as well. And in the beginning of this interview, you did mention about store expansion, 250 stores, and correct me if I'm wrong. So expand a bit more on that, on what is the current number of retail outlets, and what's your further plan of expansion, especially as far as your retail footprint is concerned for your restaurant and FMCG portfolio?
So currently we're operating close to 700 stores. I would be at 691 to be precise, across Wow Momo, Wow China, Wow Chicken. Out of that, Wow Momo individual stores would be 450. And we would have combo outlets of Momo and China of close to 200. And then the rest would be chicken. But net, I would say that this year is a very critical year for us. We are looking at opening 250 stores. Out of that, 175, we intend it to be Wow Momo alone. WowMomo is a model which we've cracked. We are currently in 60 cities. I think we want to get to 100 cities. I'm very clear with my thought process that, Domino's, which is a role model brand for me, converted a roti eating country to a pizza eating country. And if they can sell, pizzas in 500 cities, I'm sure we can sell momos in 500 cities. But the first goal or the milestone for us is to get to 100 cities. So I think the major expansion continues to happen with WowMomo. I think with Wow China, we will tweak the model a bit and expand it faster and quicker next financial year. With Wow Chicken, I think we're going slow and steady. We're going to be opening 36 stores this year. Very clear that we want to focus in south of India and east of India. I think that is where the big non-veg market is. And for us, Wow Kulfi is more like a McCafe inside McDonald's, right? It's more like a shop-in-shop format. Wherever you have a WowMomo store, just plant in a Wow Kulfi. So there we want to have more touch points. I think currently we have 200 touch points of Kulfi. We want to get to 500 by the end of this year. So yeah, I think exciting times ahead. Talking of FMCG, I think we are a 5 crore monthly business today, although it's burning money. But I think, we should close this financial year at 75 crores. So it should be a good 120% jump as compared to this year. And we should get to a run rate of around, 9 to 10 crores by March of next year. So FMCG is major expansion. At the moment, you have frozen momos, you have kappa noodles. Wow Kulfi would be entering very soon towards the end of maybe Q4 of this financial year. We would also be playing around with spices and sauces. So lots happening in the FMCG space. I think Wow is going to be a product to reckon with. We feel Momo has become that hero product in the frozen space for convenience eating. What else can we make convenience and get Wow to reckon with? Let's figure.
Absolutely, Sagar. And, when you talk about all of these categories, I have to ask you this, since you've expanded into the Kulfi segment as well, which is uber competitive, are there any more categories that you're looking at venturing into?
Not at the moment, Sumita. I think we'll focus to where we are, what we are doing at the moment. I think in QSR, we have our plates full. Rather, within QSR, like you see the K-pop culture coming in, the Korean culture coming in. So now we have Korean momos that is coming in. This year, we launched gluten-free momos. So, we'll be the, gluten-free momos are going to be like diet momos, like, healthy momos. I think the only unhealthy part about momo would be the maida. So now it's going to be gluten-free momos, steamed. What else can you get? We're going to be doing a lot of Korean popcorns in Wow Chicken, Korean meatballs. In Wow China, we have a Korean hot ball range. A lot of soups and I would say ramen bowls coming in. So I think Korean is the key word for the season. It's going to be a winner. I think every QSR brand is looking into that. So are we, but we're also, in India, we are still 5 years away from pure play health selling in QSR. Today, what sells in India in QSR is perception of health. But I think we want to be the pioneers there. So that is why the gluten-free momo comes in. Very soon you'll see gluten-free noodles coming in Wow China. So yeah, I think it's a new age business. I think we want to cater to the Gen Z, which is going to be your largest audience going forward. And the Gen Z is looking at health, is looking at newer flavors, is looking at value for money. And I think that's where Wow stands out.
Right. So, Sagar, very interesting, takeaways from what you said, that as a market, there is still some time before we actually move to becoming a health-centric market. As of now, it's just the perception of health that is being sold. But let's also talk about the financials of your company. You closed FY24 with revenues of 480 crores. How much more are you looking at expanding your revenues? And of course, a margin growth, if you could throw some light on that aspect as well.
So FY25 has largely closed around 625 to 635, depending on where the numbers get closed after auditing. But I think a 630 number would be safe to say. The QSR business would be at a -3, so it's come down from a -9 to a -3 in terms of EBITDA. So we've really improved in spite of growing at 30%. So very happy about that. And we aim to get the QSR business to a break-even number by this financial year. So really proud of the team to be able to deliver that. Talking about FMCG, obviously, it's a new business. We're just 28 months old. So it was at 100% burn last year. This year, it's come down to a 50% burn. I think FMCG for us, we should touch 75 crores with a stop loss of 12 crores is what we're looking at for this financial year. So I believe QSR would break even. FMCG would be slightly negative by the time we end this financial year. But if we talk about a 24 to 30 month story, I think the business should throw back 75 to 100 crores of cash on a top line of 1100 to 1200 crores. So I think that will be a very comfortable position for us to be at.
Absolutely, Sagar. And let's also talk about some things from a consumer point of view. Will you be taking price hikes? Why I'm asking this question is because, the monsoon trajectory this year has the weather department has said that it's likely to be above normal. It's likely to be normal. Inflation has also inched down. So are you going to be looking at price hikes, given that this is the time that when most FMCG brands decide whether to take a hike or not?
After a lot of difficulty, we've become positive. we want to continue remaining positive. So you will see a lot of deals, a lot of value for money formats coming. Any new product we launch, we try and make it value for money from day one, where the food cost is measured in a particular manner where it is not very expensive for the consumer, but no price rise for now, either in FMCG or QSR, at least for the next 6 months for us.
All right, so that sounds very good that there are not going to be any price hikes, while there will be variety that will be served by the WowMomo company. Let me talk about an issue from an NREI perspective. Now, you've also been raising the issue of delivery apps eating into your share of revenues, particularly restaurants' share of revenues. And there was a little bit of back and forth last year as well. We also spoke to you about, and you stated that there are clandestine measures that have been adopted by some of these delivery apps. What's the update on that? Are you pursuing that issue further? Have you spoken further to the government as far as this is concerned, or regulator as far as this issue is concerned? And what are you exactly hoping for in terms of a potential solution?
Definitely, we are working with our legal teams. See, like I said, I wear multiple hats. So apart from being the founder at Wow, I'm also heading the NREI, where we feel it's absolutely unfair for the food delivery aggregators to do their own private labels, come up with their own app of Snack and Bistro, which I believe is selling similar products, and they have all our data over the years. Completely condemn it, because we've always given verbal assurances by them that they would never enter this space. So from a legal perspective, from a legal standpoint, we are doing what we have to do. I think we are building onto the legalities, and we will definitely challenge this at the right forum, at the right time. A lot of work is happening, is all I can say. Talking about the other thing that really affects us is that these aggregators change their policies unilaterally, without any discussion with merchants, with partners, with the NREI, or with the fraternity, right? So what we don't want is that we don't want a one-way, one-sided agreement or a terms of trade, right? I mean, today, every aggregator has a partnership with a restaurant operator. So in case there is change in policy, you can't just unilaterally come and say that, from tomorrow onwards, there will be an additional payment gateway fee. I mean, that's a commercial aspect. You need to negotiate with your restaurant. You cannot unilaterally come and say that, on cash on delivery, in case the consumer is not paying, we will not bear the brunt. If you will not bear the brunt, who will bear the brunt? I mean, today the restaurateur has no data. I mean, how can you imagine a restaurateur to not have any data and not accept orders from a consumer without knowing he or she will pay on cash on delivery or not? That tool is with them. Why should the burden or the onus come on us? So we find it to be very funny, very ridiculous. And I think we are challenging that in the right forum. Like I said, it is sub judice because we already have something with them at the CCI. But you will see a lot of, you will see us being more vocal and take steps to protect the interest of restaurateurs.
Right, and let's see what happens on that front. Sagar, one final question before we let you go, and this is essentially about IPO, given that the markets have been robust all of 2024. Some softness coming in as a result of Donald Trump's tariff policies, and of course, the kind of ripple effects that those policies will have on the overall investment climate. So what are you thinking when it comes to debuting on a D Street?
Like I said, you can't time the market, but we're looking at anything between 24 to 36 months. So you could take 30 months for us to be IPO ready. Again, in 28, 29, we have the election year. So let's see how the external political environment is. I hope everything goes well, everything is smooth. But like I said, you can't time the markets. And more importantly, forget the external aspects. Me and my team need to walk the talk. We need to meet our numbers. I hope we can get there, fingers crossed, but it's business. It's not on Excel. You have to really go out there and deliver. I hope my team can. But yeah, wishing all the luck and all the wishes to my team. And keeping fingers crossed.
Well, 24 to 36 months is the timeline that you're looking at for a potential IPO. Well, all the very best to you for that. And on that note, thank you very much once again for joining us right here. Always a pleasure speaking to you about your business expansion and the plans that you have for the company going forward.